Hey everyone, this is Charting Man Dan of ChartGuys.com here with Chart Gal Lori again, checking in on the swing report. How are you, Lori?
I'm doing great. How are you?
Wonderful. We have now a couple days until the election, less than a week away, and certainly things heating up as far as volatility in the broader market. So, as we check in on things, let's go back to one of my favorite graphs, which is the sector rotation graph or the relative rotation graph, and look into things. How do you use it as an integral part of the swing report?
All right, let's take a look. Looking at the relative rotation graph, I've already selected it, but let's just go through the steps. You go through and you select the S&P 500 sector ETFs. And this is the top 10 ETFs and how they rank from strongest to weakest. And we at the Swing Report are constantly focusing on the improving quadrant. Of course, we can't look at that quadrant without looking at all four. However, we are zooming in. We want to be on the beginning end. Again, this is July, Christmas Furbies. We're trying to pick things as they're coming into favor with institutions. And this tracks institutional money. This is big money. It has a 5-week tail. And so you think, wait, this is kind of dated. Yeah, it's dated for a day trader, but it's not dated for a swing trader. This big money can't move in and out like you and I can move our money in and out. It can't. They would just disrupt the entire market, and that's not how it works. So this is the slow movement of money. I think I used the analogy before of locomotive. Once this locomotive gets up on the track, it's hard to take it down. So we want to get on the locomotive once it gets on the track and then just ride it around until it begins weakening. I really want to show you XLU. Well, let me just, it kind of has a neat feature. When you click on like XLU, it kind of zooms in. You see that there? It zooms in on where it is in the quadrant. So XLU, you and I actually talked about this last week. We talked about real estate and utilities and being a SPY hedge and watching those come into favor. And sure enough, here we go. It's coming from the lagging quadrant, and now it's made its way into the improving quadrant. Of course, this is because they have dividends and they're a little bit more of a safety hedge to the market. And we see both XLU and XLRE work their way up. And guess what was bumped out? XLY. So consumer discretionary as fear kind of creeps into the market. So let's look at XLU a little bit more. We zoom in on the XLU sector. Again, let me just kind of walk through those steps. You choose the XLU sector, and it shows the major components that make up utilities. And if we just kind of focus in on the improving quadrant, and we click on PNW, you can see it's moving from the lagging quadrant to the improving quadrant. Again, counter, this is going clockwise. These typically move clockwise, not all the time, but typically clockwise. So this is moving into the improving quadrant. So at the swing report, we would look at this and say, okay, let's go look at that name. Let's look at PNW. PNW actually is in a weekly, it's a daily uptrend, and it's in a weekly uptrend. It's testing key supports, the 50 MA, and then we would look at this for a potential entry. So this is how we use relative rotation graph, and then how we follow the money and identify names that may be opportunities for us.
All right. So we've got a couple common questions from the Swing Report subscribers over the last week, and we can go through and answer those and hopefully help out others who have the same questions. The first is the Swing Report has, 6 trades highlighted, and someone might want to look at all those and say, how do I know which to choose? I want to take all of those trades. What would you suggest to someone who has that initial thought?
All right. Looking at my son. All right. So my son, this is him when he was 4 years old, skiing the gates at Mount Rose. So he was a competitive little skier. And every time I'd take him to the bottom here, he would say, Mom, I want to ski them all. I just want to get on all of them, the gates. I want to do the moguls. I want to do the chutes. I want to do the terrain. And you have a limited amount of time. You can't ski all the runs. And that is the same thing with trading. You can't trade all of the names at once. You have to pick and choose. And he would invariably get to the end, get to the bottom of the mountain, and one of his friends say, oh, you missed the fresh snow in the trees, fresh powder. And he'd be like, Mom. And I hear that from Swing Report members. I missed that big run up on Upwork. I missed that big blah, 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 blah. You can't touch all the water. You can't ski all the runs at once. Stick to your plan, stick to your confines. Here's my run, and I'm going to stay within the barriers. Stick to your trading plan. And then when it works and it's beautiful. And then if someone else makes a ton of money on Upwork and you didn't, okay, I'll catch the next one. So that's kind of how, that is how you have to have your attitude in swing trading. You're not going to catch all the runs and all the fresh powder.
So let's say I just got stopped out on one of the swing trade game plans. What do I do now?
You get stopped out, you get off the train, and you just wait for the next one. You set alerts for more names to get back into your buy zone, for conservative entries, and you wait to pounce. We don't have to catch every train. We're just waiting for those that come into our buy zone.
So if I'm looking at 6 names, and if I know I don't want to take all of them, that's a little bit overwhelming, what steps can I go through to choose which name is perhaps ideal for me?
Again, absolutely great question. You have to look at what you already have in your portfolio. If you already have Apple, Google, Facebook, and maybe the name this week is Amazon, and then you have AWK, a utility name, you're going to kind of steer yourself away from the technology name. This is something I can't do for you. You have to know your own portfolio and what positions you have established. And diversification is really the name of the game. You don't want to get heavily loaded into one sector.
I would say also looking at the chart for yourself, I know there's many setups that I am much more confident in, and I can rotate through 5 or 6 different charts and say, okay, this one is the most clear for me. I've seen this pattern many times. I'm comfortable with where this key support level is, and that's a trade game plan that resonates with me. So that would be my suggestion as well.
Absolutely. It's kind of like putting all of your money in one basket, and to use one final analogy is kind of like having the royal family. They all can't get on one plane at once because then you'd have no lineage to carry on the throne. It's the same thing. You can't put all your money in one vehicle. And if that vehicle goes off the road, what are you going to have? You got to live to trade tomorrow. So that's really key in trading is risk management and not overloading yourself too heavy to one side.
All right. Well, thank you for the check-in, Lori, and certainly going to be a busy week next week. We'll check back in then.
All right. Thanks, Dan.
Bye.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.